stop scrolling. Because what's happening in the silver market right now doesn't make sense. Prices are volatile. One day silver surges, the next day it drops hard. Headlines are confusing, analysts are divided, and most investors, they're completely lost. But behind all that noise, something much bigger is quietly unfolding. According to research tied to JPMorgan Chase, silver could be heading toward $81 per ounce by 2026. Now think about that for a second. That's not just another bullish prediction. That's a signal that one of the most powerful financial institutions in the world may be positioning for something most retail investors still don't see. So the real question is, if silver is so volatile right now, if the market looks this uncertain, why would smart money be turning bullish? And more importantly, what are they seeing that you're not? Because over the next few minutes, we're going to break this down step by step, and by the end of this video, you'll understand why silver is behaving so erratically right now, what's driving this long-term bullish case law, and why this volatility might actually be the biggest opportunity. Welcome back to John Forecast. If you're new here, this channel is all about breaking down the real forces, moving markets, no hype, no noise, just clear, data-driven insights designed for serious investors. And today we're diving into one of the most misunderstood assets in the market right now, silver. Not gold, not stocks, not crypto, silver. Because while everyone's distracted by AI stocks and rate cuts, silver might be quietly setting up for one of the most explosive moves of this decade, the confusion in the market. Let's start with what everyone is seeing right now. Volatility. Silver isn't trending smoothly upward. It's not crashing either. Instead, it's moving like this chaotic, unpredictable asset that nobody can quite figure out, and that's exactly why most investors are ignoring it. But here's the truth most people miss. Volatility is not weakness. In many cases, volatility is what happens before a major breakout. Think about it. Before big moves in markets, whether it's stocks, commodities, or even crypto, you often see sharp rallies, sudden pullbacks, confusion in sentiment, and constant disagreement among analysts. That's not random. That's a battle between buyers and sellers. And right now, that battle in silver is getting intense. Why JPMorgan's call matters. Now let's talk about the elephant in the room, the $81 forecast. Because when a firm like JPMorgan Chase puts out a projection like that, it's not guesswork. This isn't a YouTube prediction. This isn't a random Twitter thread. This comes from commodity strategists, macro analysts, institutional research teams. Access to global data flows most retail investors never see on. And here's what makes this even more important. Big banks don't just publish forecasts for fun. Their positioning often reflects what they're seeing in supply chains, what they're hearing from governments, what institutional capital is preparing for. So when they suggest silver could move significantly higher, it's worth paying attention. The real driver, supply versus demand. Now let's get into the core of the story. Because silver isn't just another metal. It's a dual threat asset. 1. It's a precious metal like gold. 2. It's an industrial metal used in modern technology. And that combination is powerful. Industrial demand is exploding. Silver is critical in solar panels, electric vehicles, semiconductors, AI infrastructure, consumer electronics, PAM. And here's the key. Every major global trend right now is increasing demand for silver. The clean energy transition alone is massive. Solar panels require silver, and global solar installations are growing at record levels. At the same time, EV adoption is rising. Data centers are expanding. AI infrastructure is booming. All of this requires conductivity. And silver, it's the most conductive metal on Earth. Now, here's the problem. Supply. While demand is accelerating, supply is not keeping up. Silver mining is expensive, slow to scale, often dependent on other metals like copper or lead. That means even if prices rise, supply can't instantly respond. And when you have rising demand, constrained supply, you get one thing: upward pressure on prices. Quick pause. If you're getting value from this breakdown and you want more deep dive analysis like this on gold, silver, and global markets, take 1 second and hit that subscribe button. Because most channels talk about what already happened. Here, we focus on what's coming next. Now let's keep going, because this is where things get even more interesting. Why volatility is actually bullish. Now, let's come back to the volatility. Because this is where most people get it completely wrong. They see silver dropping 3% in a day, and they panic. They assume the bullish case is broken. But in reality, this volatility might be the strongest bullish signal of all. Why? Because it suggests large players are accumulating still, weak hands are getting shaken out, and the market hasn't reached consensus yet. And in markets, the biggest moves happen before consensus forms. Smart money versus retail. Here's how this typically plays out. Retail investors wait for confirmation. Institutions position early. By the time silver looks safe, it's already much higher. So what you're seeing right now, this messy, frustrating, unpredictable price action, That's where accumulation happens. The macro storm building. Now, let's zoom out. Because if you only look at silver in isolation, you're missing the bigger picture. What's really driving this potential move isn't just supply and demand. It's the macro environment. And right now, the macro setup is becoming extremely favorable for silver. Inflation isn't gone, it's just hiding. You've probably heard the headlines. Inflation is cooling. The Fed is winning. Prices are stabilizing. But here's the reality. Inflation hasn't disappeared, it's just less visible right now. And historically, inflation doesn't just go away in a straight line. It comes in waves. It cools down. Then it resurges live. Then it cools again. And every time inflation expectations start rising again, precious metals respond. The Federal Reserve dilemma. Now let's talk about the Federal Reserve System, because they're stuck. On one side, if they keep interest rates high, they slow the economy. If they cut rates too early, inflation can surge again, and that creates uncertainty. Markets hate uncertainty. But precious metals, they thrive in it. Why rate cuts could ignite silver? Here's the key connection most people miss. When interest rates fall, the dollar tends to weaken. Real yields decline. Opportunity cost of holding metals drops. And that's when assets like silver start to shine. Because unlike bonds or savings accounts, silver doesn't pay interest. So when interest rates drop, silver becomes more attractive. Gold is leading, and silver usually follows. Now let's bring gold into the picture. Because if you want to understand silver's future, you have to watch gold. Gold moves first. Historically, gold is the leader in precious metals. It reacts first to inflation fears, currency weakness, geopolitical risk, and then silver follows. But here's the difference. Silver doesn't just follow, it amplifies the move. The gold to silver ratio, there's a key metric professionals watch, the gold to silver ratio. This tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, that number averages around 50 to 60. But in recent years, it has often been much higher, which tells us something important. Silver has been undervalued relative to gold. What happens when that ratio falls? When the ratio starts dropping, that means silver is outperforming gold. And when that happens, it often happens fast, very fast. Because silver is a smaller market, less liquidity, less supply flexibility, more volatility. So when capital flows in, prices can spike aggressively. Institutional money is quietly shifting. Now let's talk about something most retail investors never see. Institutional flows. Because markets don't move based on opinions. They move based on capital. And right now, there are signs that institutional interest in metals is growing. Why big money is paying attention again? Think about what institutions are dealing with. Stock market valuations at historic highs, bond market uncertainty, currency instability, geopolitical risk increasing globally. So what do? They look for hard assets, real value, portfolio hedges, and that's where silver enters the conversation. The smart money playbook. Institutional investors don't chase hype. They position early, quietly, before headlines change, before retail investors notice, before the breakout. And if large players begin allocating even a small percentage into silver, the impact can be massive, because the silver market is relatively small compared to equities, bonds, real estate. It doesn't take much capital to move the price significantly. Volatility equals accumulation phase. Now, let's connect everything we've discussed so far. You have strong industrial demand rate, constrained supply, a supportive macro backdrop, institutional interest building, a bullish long-term forecast from JPMorgan Chase close. And yet, the price is still volatile, still uncertain, still not breaking out cleanly. Why? Because this is the accumulation phase. In market cycles, there are stages. 1. Accumulation. 2. Breakout. 3. Mania. 4. Collapse. And right now, silver appears to be in stage 1. What accumulation looks like. Choppy price action. Conflicting narratives. Frustrated investors. Repeated pullbacks. It feels like nothing is happening. But under the surface, positions are being built. Why most people miss this phase? Because it's boring. It's confusing. It lacks confirmation. Most investors don't enter during accumulation. They enter during breakout, or worse, during mania. Let's ground this in reality. Silver has done this before. Not once, but multiple times. In 2011, silver surged close to $50 per ounce. That move happened fast, and it wasn't driven by just one factor. It was driven by monetary policy, investor demand, fear in financial markets, and momentum. Now, fast forward to today. The setup is arguably more complex and more powerful. Scenario 1, the base case. Let's stay conservative. Industrial demand continues rising. Supply remains tight, and Macro conditions stay supportive to directive. Then silver moving into the $70, $85 range over time. That's not extreme. That's a reasonable expansion. And that's where forecasts tied to JPMorgan Chase start to make sense. Scenario 2, the bull case. Now let's push it further. If we see aggressive rate cuts, a weaker dollar, strong inflows into commodities, and rising geopolitical uncertainty, then silver doesn't just rise. It accelerates. Because silver is a momentum-driven asset, in that environment overshooting becomes likely. Prices could spike into the $90 range, or even test previous inflation-adjusted highs. Come on to our audience. Scenario 3, the reality check. Now let's stay grounded. Because no asset goes up in a straight line. Even in a bullish environment, silver will. Pull back sharply, shake out weak hands, create doubt. And that volatility, it will scare people out at the worst possible time. What could go wrong? Now this part is critical. Because if you ignore risk, you're not investing, you're gambling. Risk has honed, strong dollar comeback. If the US dollar strengthens significantly, that can pressure metals because commodities are priced in dollars. A stronger dollar equals downward pressure on silver. Risk #2 higher rates for longer. If the Federal Reserve System keeps rates elevated, then real yields stay high. Opportunity cost of holding silver increases in developers. That could delay the breakout. Risk #3 demand slowdown. If global growth slows, industrial demand weakens, then silver's industrial side could face pressure. Remember, silver is not just a safe haven. It's also tied to the global economy, risk #4 overhype and retail FOMO. This is the big one. When silver starts moving, media attention explodes. Headlines turn extreme. Retail investors rush in late, and that's when short-term tops form. How smart investors think about this. So what separates smart investors from everyone else? It's not timing, it's not predictions, it's frameworks. Positioning over prediction. Smart investors don't try to guess exact prices. They ask, is the risk-reward favorable? Right now, with strong long-term demand, institutional interest, a bullish macro setup with silver is becoming a strategic asset, not just a trade. Volatility is normal. If you can't handle 10% swings, sudden drops, short-term uncertainty, then silver will feel uncomfortable. But that discomfort is part of the opportunity. Multiple ways to play it. Investors approach silver differently. Physical silver coins, bars long-term wealth preservation, ETFs price exposure, mining stocks leveraged upside but higher risk. Each has pros and cons, and serious investors often diversify across them. Now step back for a moment, because this isn't just about silver. This is about something bigger, a shift in global markets. We're entering a period where debt levels are high, currency confidence is being questioned, geopolitical tensions are rising, and supply chains are being reshaped. In that kind of environment, hard assets matter more. Why silver stands out? Silver sits at the intersection of technology, energy transition, monetary hedging. That's a rare combination, and it's why more serious analysts are starting to pay attention again. So let's bring this all together. Right now, silver is volatile, the market is uncertain, most investors are distracted investing. But underneath that, demand is rising. Supply is constrained. Institutional signals are shifting to, and forecasts like the one tied to JPMorgan Chase are pointing higher WARC. If this breakdown gave you a clearer picture of what's happening in the silver market, hit the like button, subscribe to the channel, and most importantly, share this video with someone who's still trying to figure out where the next big opportunity is.